Hello and welcome to San Diego Market Watch for August 18th, 2022, where we bring you timely, local, accurate real estate information. I am your host, Deva Edelman, and let's jump right into this week's numbers. The inventory of homes for sale has remained very stable now for almost 7 weeks here. We did have a little uptick here at the end of June into July, but then it's been very, very steady, even declining over the past few weeks by just a little bit. And I would say that this amount of data is enough to call this a summertime trend. The amount of San Diego home sellers rushing into the market that we saw starting in late May and early June definitely leveled off. And therefore, I am going to say that inventory is likely to remain very stable heading into the fall. And part of this is the number of new listings has been declining week over week for several weeks in a row, with a couple of sharp declines here recently. And then if we look at pending sales, we can see that pending sales have remained relatively constant through all of this summertime ups and downs with interest rates and inventory. Buyer demand really has not changed. And with unchanged buyer demand and more inventory on the market, more standing inventory and increased market times, that has definitely led to some softening in the median price month over month. However, I still believe that at the end of the year, we are going to see an increase in median price over 2021. We just had too much growth too fast at the beginning of the year, and it had to cool off. Closed sales have remained relatively constant for the past few weeks. We have a little bit of a downtick in the last week here, but that's really not enough to call that a trend. So let's jump right over and take a look at interest rates, which have also been coming down over the last few weeks. We, of course, had a big jump in interest rates between the middle or end of May and beginning of June. And this was with the 75 basis point increase action that the Fed did at the end of May that really sent mortgage rates spiking up. But they have come down and came down even further with the second Fed action at the end of July. Investors saw that as a positive sign that the Fed was taking inflation seriously, and mortgage rates came down, also in an effort by large banks to stimulate some additional demand. So right now, the 30-year fixed rate average sits at 5.13%, and the 15-year at 4.55, and the 5/1 ARM at 4.39. So those are actually very respectable interest rates and still historically low relative to years past. Certainly higher than we started this year and higher than they've been for a couple of years, but 5% is not a dire situation with regard to interest rates. So that's what's happening in San Diego real estate this week. The number of homes for sale remains stable and buyer demand remains steady and strong. Check back again next week for another edition of San Diego Market Watch. And remember to like, share, subscribe, and comment. We'll see you next week.